John, behind from a revenue perspective, but also very behind from a profitability perspective. Google Cloud is the distant number 3 in terms of the hyperscalers. It is still losing money. What turns it around, especially when Azure and AWS are growing at pretty similar rates from a much larger base?
Yeah, great question. Thanks for having me on. One of the things that we did with this work was we actually introduced a Google Cloud model. Remember, Alphabet, provides revenue and op income for Google Cloud, but they do not break out GCP and Workspace. And so we were able to do that, and we found a couple interesting things. Number one, we think GCP is about 75% of total Google Cloud revenue. And then we're also able to compare GCP with, to your point, with AWS actually going back and going forward. And the 3 interesting things we found, which you said, yeah. So we think GCP is about 5 years behind AWS from a revenue scale perspective. So the revenue this year for GCP looks like AWS revenue in 2017. Secondly, and I think importantly, and I'll tie in the operating income in a second, but the GCP from 2019 to this year, their revenue is tracking pretty well with AWS from 2014 to 2017. So the question is going to be, can it, the next 4 or 5 years, can it track with AWS? And if it does, our numbers are going to be low, even though we raised today. And then a great point, Google Cloud has a negative operating income. GCP, we found there's a huge gap between GCP and AWS at same revenue scale. And the gap is seemingly widened in the last couple of years, even though, per our estimates, GCP revenue has quadrupled since 2019. The op income gap versus AWS at a similar revenue scale widened. And I think there's a couple reasons. I mean, they are, like you said, they're number 3. They're the competitor. Maybe the way they're architecting their data centers relative to Amazon and AWS. But I think being number 3 player has an impact on profitability. All that said, but there's the opportunity, right, for the Alphabet shareholder. There have been rumblings that Alphabet and within Google Cloud is going to focus on profitability, and so there is an opportunity.
Yeah. To what extent should we be looking at this from more of a gross margin perspective, large customer perspective, and the benefit across Google? To what extent does it make sense to look at that versus revenue to revenue based on what Amazon was building 5 years ago? Is the structure and value in the cloud changing such that investors need to think about that differently?
Yeah, it's a good question, John. I feel like when we modeled it out, we think AWS, and again, they don't break out, like they don't go to the gross margin level, but we think GCP's mid-60s gross margin, and we think a lot of the losses come from the other OpEx, whether that's, remember when Thomas Kurian came on board, I believe it was in 2019 at Google Cloud, they've done a lot of hiring. So I think there's a lot of headcount and a lot of costs within below the gross margin, gross profit line that are leading to the losses.